We continue to confuse the money game. Money is a representation of value once again. And if we start to add it without people creating value, it devalues the existing dollars. And unfortunately, within 3 to 5 years, it all ends up in the same hands anyway. So what happens is the middle class gets poorer, and the poor get poorer, and the rich get extraordinarily rich because they're using and playing a different game. Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. Are you worried about inflation with the massive amount of money that's been added to the economy in 2020? Hey, notice I said added, not even printed anymore, right? Should you pay off loans or consider investing? What's the right thing to do there? Or is now a good time for crypto or gold? Lord knows you're going to hear millions of people just go, oh, you got to do it. It's where it's at. I'd be a little bit careful before you dive all in. And if you're wondering what the best methods to determine what to do with your cash, well, you're in the right place. Pay attention. Stolba, what's up?
Hey, you said, are you worried about inflation? I have some concerns about inflation.
You should. It's pretty severe.
Oh, thank you for comforting me.
I'm glad I could help you sleep better at night.
I came across this screenshot that I took, and since we're gonna talk a little bit about inflation, I'm going to share this with everybody. So this is during the Super Bowl. Okay. So this is a 50-year difference. So average ticket price on the 50th year anniversary, so 2020, $2,500. What do you think it was 50 years ago? 50 years prior.
$17.90.
15. You were so close. Yeah, $15. Okay. So now the cost of a 30-second commercial today, in today's age, $5.6 million. That's asinine. That's crazy. But 20 years ago, what do you think it was? 30-second commercial. Or 50 years ago, sorry.
50 years ago, like $10,000.
78,000.
I mean, I just thought there'd be so many fewer people watching, but now as I think about it, there's so fewer channels back then. So, yeah, so I was a little low on that.
That's the jump within 50 years is gigantic, and that's inflation, right?
That's a big part of it. Definitely. I mean, they've added a lot more entertainment and, made the Super Bowl a bigger thing with its brand, but at the same time, the cost has gone up so insurmountably because we keep adding money to the economy. That we don't even print it. There's only like $1 trillion some dollars of bills, but there's, tens of trillions when it comes down to it with the money. And what it's doing is it's confiscating people's wealth. It's adding to some people's wealth that are playing by leverage and derivatives and, invested in owning, the stock market where they're a hedge fund or something like that. But for the person that's just working and trading their time for money, and then they're just trying to, get by, save that money, it's just lowering that money's value because dollars represent value. And if we add more dollars without value, then it devalues the existing dollars.
Yeah.
That's a big part of it. There's also other complicating things like fractionalized banking.
Yes.
You want to explain that?
Which is so disturbing.
Yeah.
I mean, I don't want to explain it, but you can.
Yeah, we're lending out money more than once.
Yeah.
So it just keeps getting lent out. These are a lot of the factors that create inflation.
Yeah. One of the things that I was thinking about when it comes to inflation that I want people to understand is when we had all of this money come out early part of 2020 for the stimulus package, it's not like the government had that money in savings. It wasn't a reserve that our government or the Fed had, right? Because there's a difference between...
Yeah, the Federal Reserve is not federal, nor is it a reserve.
Yeah.
It's a central bank, and it's owned by private individuals. So
yeah, and I think that's a good delineation.
It's a pretty, you don't want to go down that rabbit hole.
Right. Yeah, no.
You won't feel warm and fuzzy by the time it's over.
I just keep thinking, I want people to be helped, but at the same time, we don't have reserves. So when we add and pump money into the government or into the economy without it being from reserves or saving, that creates massive amounts of inflation.
It devalues the representation of the previous dollars. Let me say it this way. Imagine you got a mortgage,
yes,
right? And you decided that you wouldn't pay that mortgage off. You're just going to make the payments, and you had a 15-year loan, and you're chugging along. You're 10 years in. You only got 5 years left, and you go out to your mailbox. And you get $1 million check. Like, oh, awesome! Got a $1 million check. You feel so good about it. But then you find out that your neighbor got $1 million check, and your other neighbor got $1 million check, and you call your family, and they got $1 million checks. Everybody got issued $1 million checks. Now, if I did everything I could not to pay off my mortgage, I've only been paying my interest. I haven't paid anything down on it. I'm so happy about that check, a lot happier than you are, because you took hard-earned money for 10 years that was worth so much more. We just valued everybody's cash. And I just got that cash and I paid off my mortgage without doing anything. And what we do is we create this cash because we think that we're going to help people. But in reality, we cripple them because we think that we continue to confuse the money game. Money is a representation of value once again. And if we start to add it without people creating value, it devalues the existing dollars. And unfortunately, within 3 to 5 years, it all ends up in the same hands anyway. So what happens is the middle class gets poorer and the poor get poorer and the rich get extraordinarily rich because they're using and playing a different game. So it's frustrating.
This is disturbing.
So glad we can inspire everybody today, Stolba.
So let's bring some inspiration. It's truth, but it's unsettling to know that.
And
so
we have to be strong enough to hear the truth.
Yes, absolutely.
Like this whole notion that we're protecting people by not telling them what's going on is crippling us.
It's placating.
It's silly. And what it does is allows politicians to continue to abuse the system and abuse their power at the cost of people that are doing the work.
Right.
And it just annoys me when these politicians say they're going to give people raises. That's not a politician's job. Let the market determine. And if you don't 100%. Like what you get paid, it's time to choose a different career. It's time to get a different education. I get it. There are absolutely situations where people are in environments that it's extraordinarily and exceedingly difficult. That there's everything from prejudice and racism and all sorts of things that are harming people, sexism, you can name it, that are actually destroying people's ability to create value. And we got to get past that. That annoys the hell out of me.
Absolutely.
But a politician isn't going to solve it. We're going to vote with our dollars.
Yeah.
Like everyone's, oh, we got to vote. It empowers the people. No, we got to vote with our dollars. We got to vote with our actions. We've got to do something that says we're going to take personal responsibility for our own situation and the impact that we can have on those that we reach. And it isn't about trading time for money anymore. It isn't about just taking care of ourselves and no one else. Those are the old times that have got us to where we are today. And it's been good in some ways, but horrific in most. And it's time to actually give a shit about humanity for once. And it's time to realize we're capable of so much more and that we don't need a government or another entity to save us or take care of us. That weakens us. So just a little notion.
Amen to that. Personal responsibility, owning your power. Do not forget that you are a powerful individual with autonomy, with abilities and things that you can share. Never forget that. It's no one or anything outside of yourself.
Right. And let's let human beings be human beings. Like one of the most important things that happened in my life was when I was 18. I went and taught English in South Korea. Now, I grew up in a small coal mining town, which is kind of like a America kind of town, right? Like we're the only free country and somehow we're the favored people and all that kind of crap that I really kind of believed ignorantly. And then all of a sudden I go to Korea, I'm like, these are amazing people. There's a lot more peace here than what I'm dealing with, you know, in the States. They're just, you know, they're actual human beings. There isn't like better than and all that kind of stuff. And it was game changing. And so when we can start to exchange with one another, when we serve other people, when we solve problems with each other, when we work together rather than separately, I think that there could be so much more wealth, and we have the resources required to solve the major problems that we face if we can overcome scarcity. If we could become the value creators we were born to be and not be protected or taken care of or handled or blinded or coddled. Like the system sucks. My vote is we're done with this crappy system, right? My vote is let's just treat people really well. And let's learn lessons. Like we're going to learn from every person we encounter, either a way that we would like to be or a way that we wouldn't like to be. And we can still love people from a distance. That's the thing. Not everyone's going to be nice and warm and friendly. There's a lot of people that are hurt, and hurt people end up hurting other people. So as much as this is an Ask the Money Nerds episode, I think we have to identify that this began with inflation, but we have this kind of underlying problem that people believe in a zero-sum game. It's a take what you can. It's not personal. It's business. And it kind of devalues individuals, right? And if we can just get back to value ourselves and valuing other people, there would be a lot more prosperity in the world. And no one's swooping in to save you, unfortunately. So it's good to see people standing up for themselves. It's good to see people actually reaching out and helping others, thinking more than just about their own survival, because that's what's going to get us through, not a government. Governments are not capable, nor are they that interested when it comes down to it, is my feeling.
I'm with you. This is a little financial sermon. Let's do Kathy's
let's get
question.
to a question.
Okay. I could keep talking about this, but let's get to the point here. Kathy's question, this is what she says. Our house is worth $460,000 right now, and we owe $175,000 at 4%. Our father owns a home worth $150,000. He is now living with us and planning to sell his home. With inflation coming, should we put the proceeds of his sale toward the $175,000 mortgage or invest it in crypto or gold to buy land? Thanks for sharing your knowledge. You know, people are also asking about silver.
Right.
So there's lots of concern around inflation. What do I do when the dollar's not worth a thing?
Well, the dollar may not be worth what we want it to be, but neither is gold and silver.
How so?
Gold and silver is worth what we agree that it's worth. The reason why people feel more comfortable with gold and silver is because it feels more finite. We don't know how many more dollars they're going to add to the economy today or to the computer screens or the banking system, and we feel like we have very little control over that. So gold and silver being a little bit more finite, could they mine more of it? Sure. But what people don't recognize is because of derivatives, there's a lot more paper that lays claim to silver and gold than there's actually silver and gold. So it's a certificate that says...
Everybody's not taking receipt of it.
Right. So you're like, oh, I have this certificate where I could do this. Maybe you own it through stocks, just as an example.
Got it.
Well, if everybody cashed that in, there isn't the backing for it. So it has some of its own problems.
What's a derivative?
So, I mean, a derivative is basically, it's like this. There's no real simple way to describe it, unfortunately. But when we think of like margin or when we think about options trading, it's like having this underlying asset that's represented some other way. So when you're selling short, you're saying, I expect this to go down. So I'm buying insurance. I know if that goes down, I'm the one that gets the money. The person who bought hoping that it goes up is the one that lost. So it's kind of this win-lose platform. And derivatives can allow us to exaggerate that experience by buying on margin, by borrowing, by having leverage, by using other underlying securities. And so I'd like to hear someone explain it very simply. And what it is, all I know is that it's allowing people to play by a game that they can earn massive amounts of the money at the expense of other people that are just plugging along, handing their money over, hoping that it's going to work out. And so I understand the appeal of gold and silver, but look, there was an appeal during 2000 when the market was going, down for 3 years. There's an appeal in 2008 when we were worried about, hey, what's going to happen with all the banks going under and this recession hitting. Yeah. And so during those times, people tend to turn towards gold and silver because it's a type of commodity that's fueled by fear. When people are afraid, they move towards it. It's volatile though, especially silver. One major player could sell it and it can have a huge dip. And a lot of the people that I know that have massive amounts of gold are into conspiracy. And they're completely under the notion that we need to buy bunkers and that it's about land, it's about guns. And the thing is, if they're right, I don't want to live anyway. So who gives,
take me now if that's point, the case, right?
I think toilet paper is probably going to be more valuable as we saw during the COVID era versus maybe gold and silver.
Disinfectant wipes.
My issue is gold and silver is not creating cash flow. Yeah. And people go there because they lose confidence in something else, not because they have more confidence in that. And then there's this hype machine. Like I remember from 2008 to like 2011, so many commercials, cash for gold. Like, cause there's like so many people going, we're going to buy it. We can run it up. And then they eventually sell it and then it drops out. And what happens is this kind of greed gland kicks in for people that with the fear and the greed coming in, they're like fear of, okay, my dollar is not going to be worth anything. And greed, I've got to have more wealth. So they speculate in this, not knowing enough about what's going on. Now, I'm not upset with this question because she's asking from a good place.
Yes.
My question is, what do you know about gold and silver? What do you know about crypto? How do you protect the downside? How do you cash flow that? How do you create economic independence? What are your levels of certainty? Is it investment or is it pure speculation? And for most, it's speculation.
Yeah.
And so this is my concern. Now, at the same time,
speculation driven by fear.
Right. I'm very concerned about people just taking their lump sum of $175,000 and just paying that down on an amortized loan because it doesn't lower your payment, but it does lower your balance. It does shorten the term of how long you'll have to pay on it for, but you still have a higher payment, and now that money's locked up in equity jail. It's stuck inside of the home. So if you have an interest-only loan, paying that down, no problem, because it's going to lower your payment. If you have an amortized loan, it's going to shorten the term, it's going to lower the balance, but it isn't going to lower the payment. And you still have a cash flow issue there. So, and because of inflation, we go back to the very first example of this $1 million check that we magically get. That means that everybody with student loans was happy they kept them, because inflation helps you with your loans. I'm not an advocate of everybody going and leveraging and borrowing money to try to get ahead. Too many people take risk and they lose everything doing that. But if you have a mortgage over 30 years, your payment 15 years from the first payment is a lot easier than your first payment, because inflation's actually helped you. It's made it where, oh, I should be making more money, having more money, because my money won't buy quite as much, but my payment didn't go up.
Got it.
So that's why I'm comfortable carrying a mortgage. And I'm also looking at something called cost of money. So cost of money is, we always pay interest, whether you pay cash or whether you finance. What happens when you pay cash?
You forfeit your right.
You forfeit the right to earn interest. It's a little bit more sly. It's a little bit more subtle. It's more understanding economics, but you forfeit the right to earn interest on that money. And instead, if we borrow, we know very clearly that we pay interest, but either way, there's an interest cost. So look, if you knew you could earn 5% guaranteed, I'm not saying people can, but if you knew you could earn 5% guaranteed, here's one way that we could look at that.
Okay.
A lot of people are shortening their mortgages right now because interest rates are really low. They're like, hey, I barely up my payment. I barely up my payment, but I short. So look, it's good. It's progress. I'm happy. But what if at the same time they had a 15% interest rate credit card? We had other Money Nerds questions at 22, 29, 27, something like that. So if you shorten your mortgage, every dollar that it now costs you more than if you would have kept your mortgage at 30 years or longer, it's costing you not just that dollar, it's a dollar plus 27%, because you would have been better off using that money to pay off your highest interest rate.
Woo, listen to that again.
That's cost of money, Stova.
Yes.
That's understanding what's your highest cost of your dollar, or the best use of your dollar, and what's that sustainable rate. For some people, they don't know much about investing. They don't take time to learn to be an investor. So it's whatever the banks are giving them, which is next to nothing. They're probably very best just paying these things off as quickly as possible. But there's a way to do that intelligently, and we have other videos on that.
Yeah.
But if you could do something even basic, like what I do at Cash Flow Banking, I can earn a little bit more. It's not a huge amount more than what I'm being charged on my mortgage, which means I'm doing to the bank what the bank been trying to do to me forever. So, so my thing is, I would be really careful with gold, silver, and crypto. Crypto-bismal. No, crypto. Crypto is highly speculative. It's very early on. You have entire nations that might have their own digital currency, essentially. You don't have certain institutions backing it yet. We're seeing, like, there's just a lot of news coming out. So that could be a hedge. It could be part of the strategy. It shouldn't be where you put all your chips unless that is your complete expertise and what you're dedicating your life to. Otherwise, it's complete gamble. So we've covered cost of money. We've covered some of the reasons why inflation exists. For me, it would be, could they become cash flow investors? Is there something they can put the money in that can create cash flow for them? If so, great. And if you're willing to sit on the sidelines for a while and be patient, which is kind of what it takes to find really good cash flow investments, well, then that might be okay to sit on the sidelines temporarily. But if they do invest, it's all about managing risk. How do you protect the downside? Really wealthy people are extraordinary at managing and mitigating risk, but the world thinks they're good at taking risk.
Yeah.
But we got to learn to be better at managing risk, right? And so if you can find a way to make money on the buy, the right deal, the right investment, the right business, I mean, with that amount of money, you could actually buy a business if you're willing to do the work of owning that business, right, as an example. But I would really look for recurring revenue. And look, I would go to budgetingsucks.com, because that book, I mean, that book is so much more than how to overcome budgeting mindset. That's like a tenth of the book. The book really shows you how to become a better investor with Investor DNA. That book really outlines ways to create cash flow with your money and how to plug leaks so you keep more of what you make, and how to mitigate and manage risk. And I think I do it in a fairly entertaining way. So budgetingsucks.com. Now, I've talked a lot on this one video. Anything else we are left to talk about here?
No, I think we've covered it. I just feel compelled to remind people that, like, you're a sovereign human being with freedom. Own your power. Don't forget it. This time just feels so stressful. There's so much anxiety, so much uncertainty, but don't forget you're in the driver's seat of your life. And that's my reminder that I want to leave people with.
Well, Stova set us off on the right way to end this. All right, now you know how to turn your thoughts into profits and build the life you love. Go out there, be productive, create value, serve others, and let's come together as humanity here.